Well, welcome everyone to today's Title Topics webinar. These are ALTA's free presentations we offer every month on issues important to title professionals. I'm Jeremy Yohe, Alta's Vice President of Communications, and today we've got a fantastic webinar lined up to discuss blockchain. And as you'll see, the goal of today's presentation isn't going to be a blockchain 101, teaching you the basics, but our speaker really wants to give you the knowledge on how to understand and measure blockchain projects, and he'll get through the agenda and get to that here in a little bit. Just need to touch on a few housekeeping items before we get into the presentation. You can download a PDF of the presentation from the GoToWebinar window pane. All participant lines are muted for today's presentation. If at any time you do have a question, submit them through the questions box, and we'll hold some time for Q&A at the end of the webinar. As an added benefit, today's presentation is being recorded. I received a lot of emails asking about that. After we've got the file processed, the recording will be made available on Alta's website at alta.org/title topics. That's alta.org/title topics. You'll also get a link to access the recording directly. I need to thank Fidelity National Title Group for sponsoring our Title Topics webinars this year. This support allows us to continue providing these educational opportunities free of charge. And with that out of the way, let me introduce today's speaker. Joining us from my home state of Ohio is Tony Franco. Tony is the founder and CEO of SafeChain. SafeChain is, excuse me, a provider of wire fraud prevention software. And SafeChain has been doing some really cool stuff related to blockchain, and recently helped facilitate the sale of 46 foreclosures here in Columbus, Franklin County, specifically using blockchain to legally record the transaction. So you definitely have an expert in this area. And with that, I'll turn the presentation over to you, Tony.
Jeremy, thank you so much. I very appreciate it. Happy to be here, and thank you everybody for taking time out of your day to join us. I'm gonna hop right in. All right, so goals for the day is that we want to provide companies with tools and methods to evaluate blockchain projects. We think that there are a series of projects coming online more and more every day. And more important than any one project, we think is kind of how we think about projects overall in the space related to innovative technology. The other thing that we want to do is provide frameworks to measure and track blockchain projects in title. Again, as we think about, they're potentially looking at, if you look at the last 2 years, we've obviously seen a massive increase in the amount of total projects coming on. We thought that there's a ton of information that people need to consider. We're hopefully going to shed some light on, leave you guys with a scorecard to help measure projects long term. What we're not going to do in this, and we think this is equally as important, is go deep into technology. This is something that requires for the projects requiring technical background. I'm not a coder, an engineer, and so we're not going to go deep into the technical aspects. We're not going to tell you what products to use. And we're not going to make you an expert or give a one-on-one. We provide links that you guys can grab. You can get 101s in a million other places. Many of them are very good. And so we're going to do a quick refresher, but try to stay off of the 101. All right, so who am I? I'm a technology entrepreneur who has made a career bet that the title industry, title settlement and insurance, is the next stop for blockchain after cryptocurrency. I'm passionate about technology and have been paying attention to blockchain for close to half a decade now, so not as long as some people, but longer than many. Before I was running a company, I would call myself a product manager, and product market fit is a skill set that kind of is near and dear to me. What that means for the people who are not in technology is product market fit is related to market research, customer validation, and putting initial products into market. And I've started a company to help title companies, specifically independent agents with various needs related to their everyday business. Beyond all of this stuff that's on the slide, I am truly passionate about the technology. I think that technology is a way for us to improve all of our daily lives, and I think that this is the application of business is just one of those ways. And so I'm personally really, really excited to talk to you guys about blockchain today. So what are we going to do today? We think that we want to do a level set, go over what is blockchain, how does it benefit you, and then I want to make a case for why focusing on technology is not the right place for non-technical people to focus. I think that a high level from this entire presentation is that there are ways that we can look at products that don't require us becoming math experts or learning how to code. And so I'm going to make the case that focusing on the products and the benefits are a little more time efficient way for the general person in title to understand blockchain. Second, I want to walk through a landscape of where we are today related to the various projects that are coming online. And then the bulk and meat of the presentation is about assessing projects. What key questions you should ask on every single project whenever someone says, you know, blockchain's going to do decentralized art, or we've got a token for dentists, or any other kind of crazy tool. There are some third-party tools that you can use. And then there's the last bit is a scorecard, which is kind of our opinion as to how we think about evaluating projects. And then last, we want to take a look at the scorecard, do a project side by side, and kind of talk through that. At the end, we'll leave you with a scorecard that you can download and in the future take a look at projects. All right, so with that, let's jump in. All right, so what is blockchain? First and foremost, again, I don't want to focus a lot of time on this related to the 101, but to level set, blockchain is a database that multiple people can manage together with no central trusted authority. Different than today's databases that can be spread over many locations, but if you compromise one node in the database, the entire database is compromised. Blockchain databases are ones that can work with at least a majority of the nodes functioning properly. Again, there's a ton of great 101 information, some of which you can easily find, but that we have at the end of this if you're interested in getting kind of a 0 to 1. This presentation specifically is kind of focusing on the 2, 3, 4, 5 steps related to blockchain. All right, so the main focus of this we're going to get into is what are the benefits of blockchain, and we think that everyone should stay benefit focused. And so blockchain has promised a myriad of benefits, some of them that will definitely substantiate, some of them that may substantiate, and some of them that probably won't. Our opinion is that blockchain systems are going to be harder to manipulate by deploying servers, deploying information at many different points, removing a single point of failure. Immutability and control. And control is kind of a new one. I want to talk a little bit about that. One specific example is if independent agents, as an example, were concerned about a given software. When we talk to various people of the supply chain, there's often concerns about how blockchain is going to impact a given segment, whether that's the abstractor or whether that's the title agent. When you think about blockchain, independent agents could, for example, if you wanted to create a Fortune 500 bank that always and ensured that outsourced, for example, the wiring of funds, but were worried and did not want to give up that section of the transaction, a blockchain solution could allow a group of, say, 100 independent agents to jointly manage and control and own a given software. And so if one agent did not want to fit the very, very large cost of creating a Fortune 500 bank, decentralization allows groups of people to operate software in a somewhat or in a more democratic manner than what exists today. And we think that's an important benefit for the title industry. All right, so a little bit about myself. I want to talk about why we don't want to focus on tech. For those of you who don't know me, I actually am not a big driver. I'm not someone who's particularly good at it. The state of Ohio occasionally agrees with me. And as somebody who doesn't like to drive, I can look at an automatic transmission and I can see the benefits without absolutely understanding how that works at all. And so one of the things that I want to immediately separate is that you do not necessarily need to know exactly how something works, a given piece of technology, a machine, a difficult concept to realize and enjoy the benefits of that technology. And I would argue, in fact, most of the times we don't understand the technologies that provide us benefits. Even for me personally, looking at this benefit related to an automatic transmission, I dislike driving so much that I use another technology that I kind of know how works to allow me to get around town easily, which is Uber. And again, even for Uber, I know there's an algorithm. I know that taxi drivers get connected to me. I can see where my driver is, but I don't know the specifics of how the algorithm works. I don't know what language the code is written in, various other details that you could say, do you really understand how Uber works? And I would have to answer no. And so again, I very much want to decouple the idea that you need to understand the technology to understand the benefits of that technology. Again, this is funny. I always kind of imagine, like you've hurt your knee and you're getting ready to go through, and they're like, we need to take a picture so that we can see what's wrong. And then of course you're like, really, stop. I understand that, but I need to know how this machine works, and I'd really like to do, like an X-ray imaging 101. And I thought, it's kind of a bit of tongue in cheek. I think that it's again interesting and funny to consider. So. Where should you focus? You can ask technology questions. What language does it use? How many transactions? Or as a person, again, like myself who doesn't code, how does this benefit my office? Do my customers care? What value does the system provide? We think these are much, much better questions and much more fruitful and efficient questions for people trying to make sense of what's going on in the market. So again, summary on the level set. We can either be technology experts, or we can develop other ways to measure projects. We have a strong preference towards other ways. So I want to take a look at the landscape. Before I put this next slide up, I want to say that it is absolutely guaranteed that there's some project that is out there in the ether that I have missed and not put on this. We tried to focus these on people who were blockchain focused, people who mentioned either a real estate, mortgage, or land record skew. And so, again, I'm positive I'm going to get emails after this about kind of where the market is at, but I want to take a minute and say there are various sections in the landscape. There are various people going after these sections. And what you can take kind of from this slide specifically is that there are many, many more entrants playing in the real estate and mortgage space than there are in the title space. And I think that is a reflection of the complexity of title. I think that many people lack the understanding and nuance of the work that goes into the title industry. I think that creating tokens of things is a shorter distance to go than impacting such a large, complicated project. And so really all we need to know is that there are various sections. This map is going to develop over time, and that there are many, many more real estate and mortgage solutions currently than there are people focused on title. All right, so we're going to skip to another industry. This is not title, by the way. This is the marketing technology landscape in 2011, which seems like eons ago. You can see in 2011, this landscape was much more developed than ours is today. And so what I'm trying to do here is kind of create a level set. You can kind of see market leaders emerging. As you know, if you go into web analytics, all the way at the bottom, Google is there as they've started, as at this point they were moving along well. And so many different segments. We expect this to happen with blockchain as well, as people utilize the technology in an ever-growing kind of amount of areas. And so now we're going to flash forward just a short 5 years later, and this is what the marketing technology landscape looked like. So, obviously a stark comparison between the two. You can see there's, hundreds, if not thousands of companies. And so, as we kind of go backwards, not a lot of companies, very, very early market, and then a very, very well-developed market. And so one of the analogies that we kind of use and that I like to talk about related to blockchain is that blockchain right now is kind of where dial-up internet is. And when you think about blockchain, at one point on the internet, it took us 10 minutes to download an image, and not long after that, we were streaming movies instantly. And so the market will develop, and as improvements happen, they will happen quickly. But looking at where the market is, we often get asked by title companies, am I behind? Am I going to miss the boat? And looking at the kind of maturity of the market, we would say no. Even being here, we would call, being here at this webinar, we would say, certainly not behind, perhaps even ahead, depending on, the specifics. So yeah, so we think that there's going to be a bunch more projects entering the market. And the bulk of what we want to do today is talk about how are we going to make sense and assess these projects moving forward. And so we're going to go through a series of 12 or 13 characteristics that you can ask. We're going to do a project side by side, and then we'll leave a little bit of time at the end for questions. So we think there are three key metrics that people need to consider when looking at blockchain. And so the first, of course, is product adoption. That is the odds-on winner and the best way to tell that a product is working. Again, you look at a company like Softro, 45% of the market, like they have product adoption, like their product is validated. We know that the market needs it. There are various other competitors. And so how mature the adoption is, in my opinion, the absolute best way to take a look at blockchain projects. The next is kind of going the opposite direction. When we think about risks, there are various levels of things that make and biases that we all have that we want to take into consideration. We've created a list of them and want to talk about the things that can go wrong related to the risks and how you can maybe measure how much bias somebody is speaking from. And the last part is related to claims, and we don't mean like title insurance claims. We mean claims. Whereas if I promised to cure world hunger or something on the blockchain, then I would obviously lose points on claims. So let's talk about product adoption. The first and most important is mainstream adoption. This is a high bar. No one in the market has it right now. Has over 10% of the market paid for the product. And again, so 0% of blockchain projects have this right now, especially related to title. So 10% of the market. If this were to happen and you were to start to see users picking up, that's when you should stop what you're doing from your day-to-day and take a look at a project. And so this is a high bar intentionally. We don't think people are there yet. But as you notice, this is the #1 metric. And so when you're asking, is title going to change my industry? Adoption is certainly a key thing that you should be paying attention to. And, when you're talking to people at various conferences or what have you, something that, you should anecdotally be making sense of. References are absolutely critical. As you know, we're in a relationship business related to title. So when people say, can I talk to 3 of your happy customers? If you don't have 3 references, you can say that the project is incredibly early. And so that's a low level below mainstream adoption, but still important. Demo, can you see a product and how it works? That's my favorite. We would say that when people talk about evaluating projects and say, should I start learning blockchain and should I start diving in? And I kind of say not really, unless you're interested in building something. What I might suggest is take an hour and a half every 6 months and demo 3 products, or, if you want to be aggressive, once a quarter, take a half day and demo products and prototypes. I think that would be sufficient. I don't think that you're going to wake up tomorrow and an entire industry that's existed for a very, very long time is going to be completely different. And so every so often, if you made an effort to demo and look at products, we think it would put your company in a reasonable position to at least be a fast follower and not have any type of dramatic issues. And then last is prototype. Does the company collect feedback with a clickable prototype? We believe that it's a lot easier to change design screens than code, and so we do a lot of prototyping before we start engineering. It's obviously one level below a demo, but something that can suffice if you're trying to understand where a company is going. All right, so let's talk about the risks. This is something that I think is absolutely important for title companies to consider. The first and most important risk is the startup risk. Startups, as you know, have a 90% fail rate. Many of them take boatloads of venture capital, end up becoming nothing. And so really you need to think about, like, from the moment that a startup comes onto the scene, like how frequently are they delivering on their promises? It doesn't, a simple Google search will reveal dozens of companies in the startup graveyard that promised, again, to cure world hunger, flying planes, all sorts of things. And so when you look at a company, we think that startup risk is something that principally every company should take a look at. On the other side of that, there's a large company risk where blockchain has the potential to change some business models. And so you certainly have to look when a company is very, very large and say, is there an incentive for the people to say something is not going to work based on the fact that, they've been making money on it. And so the large company and balance sheet risk are kind of one and the same. And you can take a look at large conflicts of interest. If somebody has 6% of their shareholder equity tied up in a given product, it's a very good reason for them to say something is not going to work. And so you really need to consider, how big, what the size of the company is. Do they have any known conflicts of interest? If I owned an ICO and a token and was telling everybody that this token was great, that's certainly something that you should do. And we encourage anyone with known interest in any project to be honest and transparent about their pushing of those products. All right, so another risk that we think is incredibly important is compliance. There are things that fall, and we're going to talk about a project here in a minute that Fidelity started that fall in the very easy, clear path of legal versus projects that break know your customer, anti-money laundering, securities law. And so when you think about a project, like we occasionally get a hard time from people in the who are very, very hardcore about the technology. We believe that products should fit into the legal framework, and that's a personal opinion. Other entrepreneurs would tell you differently, but we tend to only look at projects seriously if they are legal and compliant or have a good chance of becoming so and are making efforts to do so. And then the last risk, this is the easiest way to kill a project. So can technology support the transaction volume you need? Our SafeChain was up in Cleveland maybe a month and a half ago, maybe 2 months ago at the Federal Reserve Conference in Cleveland. And you kind of have on one side, you have these fairly arrogant technologists that are saying, on panels with bankers who are saying, your job is on the chopping block. No, none of these jobs are going to exist in the future. And then you have the bankers on the other side who are saying, we need to do 50,000 transactions a second. And right now, Ethereum does 7 to 9, right? And so one of the easiest ways that you can look at a project, you're building something that's going to exist globally across all real estate transactions. As an example, does the technology work today, or do you need to scale the technology for something to work is a major question that you can say, does it make sense for me to pay attention to this yet? And the analogy that I would use here is, if somebody said I have a company to cure a disease based on gene sequencing, in the 80s, where the technology was very, very, it's only now that we're starting to get FDA approvals on anything that allows you to mess with genes. And so how far along is the technology is a critical question. Ethereum does 7 to 9 transactions a second. 94% of the largest projects are on Ethereum right now. And so that's absolutely something that you can consider, and that will remove a lot of concern and worry in your head about whether or not you should pay attention to something, at least, right now. All right, so then we need to look at claims. This part is tough. It's a little bit subjective. It is something that you should be considering. Companies put white papers out all the time. You can take a look and do some research. And so this takes a little bit more time to do, but if a company is new and doesn't have a demo or a prototype yet, this is kind of the only thing that you can go by. Also take a look at the marketing assets. All marketing can kind of tend to get ahead of product sometime, but how far a company is out of its marketing claims from what it actually does is something critical. And when we talk about full-time engineers related to team size, I want to be clear that we're not saying that like a really, really good small team can't win. But one example is if I said I had 4 engineers and I'm going to build a better workflow software, well, you can kind of look at SoftPro, BrandQuest, Resware, and kind of look at the team size and go, yeah, that seems really, really tough. These are very, very good companies with solid engineers. If you could build something of that scale and size with a tiny amount of people, somebody else probably would have done that. And so team size, again, not exactly like an exact fit for how well a project's going to do, but certainly reasonable to consider, have you released products related to blockchain? How many full-time engineers are working in blockchain? And then other products. This one's big for us as well. We believe that companies should release products in the markets they serve. And so, for title, when we look at title, one of the things that says I understand title is serving title with a product. And so we think that having products in market are very important and something that people should consider. All right, let's talk about third-party tools. Again, there are some technical ones. I'm not going to get into them in any type of depth. If you are technical and on this call and conversation and want to go into that, I'm happy to hook you up with those resources. My email's at the end, specifically if you're an engineer. But from a social side, you can use these tools. I'm on Twitter all the time looking at projects, LinkedIn, and Reddit, because there are experts who are commenting. And you do have to fish through. There's obviously, I'm sure everybody here has been on a forum for the internet before and understand that some of it it can look and appear crazy, but there's good critique alongside any of the social conversations going on right now. And if you looked at Monero or Zcash or Ethereum, there's great conversations that are happening online, and ones that if you're interested in, I think that you might benefit from hearing arguments back and forth as opposed to reading white papers. And so we think third-party tools like these are reasonable ways to look at projects, at least if you're just getting into looking at projects. Of course, if you're planning on putting something into production, we certainly recommend technical audits and going the full technical route. But again, not a conversation for today. All right, so this part is pretty easy. So we're going to go through these are the ones that we talked about. There's scores that are 1 to 3. These were at the end of the presentation. There's a download so that you can download these on a one-pager. They don't exactly fit well on slides, so we had to kind of cut them up into 3. But this is essentially all of the risks that we've went through, each one with a place for you to put a score and claims. So to us, what we hope that you take from all of this is that the best way to know what's going on is to test products. The title industry, talking to 10 title agents and saying, is this useful, is 100 times more valuable than any white paper you're ever going to write or read. And so we believe that by focusing on the benefits, title agents are in a perfectly reasonable place to say whether or not blockchain projects are valuable. All right, so with that, I want to do a project side by side. I want to clarify that these are my opinions. I own none of these projects, and I am short none of these projects. And so I want to absolve any conflicts kind of as we go through. This is my opinion of these projects. I'm positive that there will be some debate on them, but I think that it's a good conversation and a bridge that I wanted to cross today so that we could get some tangible looks at how, and some questions as to how we're thinking about projects. All right, so we're going to take a look at Propy. Propy wants to be a global real estate store that allows buyers and sellers to seamlessly transfer properties instantly throughout the globe using smart contracts. They are focused in many markets in addition to the United States and have offices all over the world and are looking to automate the process end to end so that a buyer and seller does not need any third-party intermediaries in between the two transactions. All right, a project some of us may be familiar with based on the recent announcement, the US-based REIT leveraging blockchain technology to invest and manage a mixed use of properties. So this is the project that Fidelity recently announced. They have a light paper out, and we're going to take a look at their project as well. So let's dive in. All right, so again, mainstream adoption. Both groups have 0 here. No one has mainstream adoption. And so this is a reflection of the immaturity about the market, not the quality of either of these two products. Again, if you think about the fact that Qualia has spent tens of millions of dollars on marketing and still does not have mainstream adoption, I just want to be clear as to how high of a bar mainstream adoption is, and that nobody in blockchain and title has it right now. When you take a look at references, we were unable to check references with Propy. Obviously, Building Block REIT came to market with Fidelity as a reference. We've given them full credit on the project. You really can't have a better reference and backing than Fidelity in the market. And so we believe that they score highly on the reference piece. Demo, Propy does have a demo and occasionally takes a look at prototypes. You can catch some videos of some of the prototypes on YouTube. Building Block REIT does not, of course, the project is just announced. So again, I don't want you to interpret those zeros as anything other than early. We think that the project is and could be legitimate in a lot of ways. And so I don't want you to interpret the zeros for those as opposed to quality. But as those numbers moved up, it would tell you, this is gaining traction in the market. All right, let's take a look at the risks. We give people the benefit of the doubt generally related to teams. One of the things that you have to look at with startup promises is that the idea that varying degrees of people globally are going to hop onto a blockchain, agree on how it's worked, and disjoint their processes, we would say that that's an aggressive claim. We think that, from a claims perspective, you have to make big claims in startups. That's part of it, but when you're trying to utilize the claims to raise money, we would say that Propi's kind of gotten ahead of themselves. Building Block REIT, we've given a 1 primarily because they're a new project. We believe, again, we put that as a facet of being new. From a balance sheet perspective, both companies are startups. They both have an incentive to say blockchain is going to work. Being an advocate of blockchain, this is one that SafeChain would certainly score high in the sense of a conflict of interest and something that you should take with a grain of salt as you're evaluating projects. Large company risk, neither has zero. They're both very, very small companies. And here's where we see the major differentiator, right? When I look at compliance and the difference between international law and people will hop on, the recorders and auditors across the country will go away, versus we're going to use blockchain to improve an already existing business function that if we use a token does not change the legality of it, I think makes all the difference in the world. And so as you probably would expect with a company who's kind of partnered with Fidelity, doing something that is and has a clear path to legality is something that you would expect from a publicly traded company. So we give them full marks for that. And then related to technology, of course, if you're doing global systems, it requires much more transactions. The more parties involved, the more transactions you need to do. Whereas managing mixed-use property, we believe that the technology probably would work today if it was built, because you don't need to do a bunch of transactions to manage a REIT related to token. And so really, where you kind of see the two projects separating is in compliance and the required technology, which we would give kind of the upper hand to the Building Block REIT project. Last are claims. Again, some of these are going to be new. Now, white paper claims, again, when you think about raising money, the public, if you will, is the loosest money related to claims that you can make without checking. And then on a scale, on the other side, you kind of have to go to the left where publicly traded companies have very strict standards for what they can do. You would put VC claims as more to the right, but certainly more institutional, if you will, than ICO money. And so, we basically believe in Building Block REIT that it's totally plausible to utilize a blockchain to manage mixed properties. Of course, the project's new. There's no marketing assets out other than the light paper yet. And so that zero, again, would be a function of immaturity as opposed to quality. We've got scores for teams and then other products. Essentially neither group offers products. We will see as we move into the market, but specifically related to title, neither of these products, neither of these projects, if you will, offer any other products than the blockchain product that they use. And so again, when you look at the important takeaway from this entire exercise, as you think about it, is that saying I'm going to change the global system of real estate versus I'm going to incrementally improve is a fundamentally different claim. And when we think about the seriousness of blockchain projects, we should be evaluating companies based on their claims and how truly serious and feasible they are. And the entrepreneur in me wants to say that, when someone tells you something can't be done, it's a limitation of them as opposed to you. But on the other hand, looking at these projects, and of course, everybody has seen the tokens for dentists and Dogecoin and all of the various tokens that are not serious projects. And so we, kind of take the claims aspect seriously. And what a company is setting out to do from the earliest onset does tangibly change how title companies should measure the projects. And so, again, going back, I'm just going to recap very, very early related to product adoption in all cases. No one in the market has mainstream adoption yet. Related to metrics, we'll look forward to seeing some of the demos and some of the risks alleviated with the Building Block REIT product as the company matures. And from a claims perspective, we think that the claims that Building Block REIT has made have been reasonable so far as we see, and so we've given them decent marks there. And so again, just a quick overview that you could use for any project. The goal of this is to be able to look at a project and within 15 minutes at least have an idea and know the places that you need to go into in more depth and more research. And so we hope that you leave with an idea that this isn't black magic. There is a black box related to tech, but that black box exists in all technology and is not something that you need to worry about. We use products all the time that we don't necessarily understand how they work, but we certainly can easily understand the benefits, and we think that title agents are kind of in the best position in the market to decide and discuss what those benefits are. All right, so I've been talking for a while. I want to open it up to questions and tell you that you can download the scorecard should you choose to in a nice format that is a little bit better than the slides that we have here today. So I want to take a moment so you can go on and hit the scorecard, and you can see a much more presentable piece of information. And so I want to stop there and pause. I know I have a feeling that there will be questions. I'm happy to answer them. I think Jeremy, you normally pick them out and discuss.
Yeah, Tony. No, thanks for the insight on blockchain. It's really cool the side-by-side comparison of the projects and kind of get a good handle of the two projects are out there and how they actually what they offer and what's out there. So thanks for taking time for that. As a reminder, we are going to hold some time for Q&A. So if you have any questions, to submit them in the questions box, and we'll pitch them over to Tony. One question came in so far, Tony. It addresses hacking and fraud. So the question is, with all the hacking and fraud that abounds in all market segments, how does blockchain stop that, or does it, and how is it more secure?
Sure. Great question. And so, hey, Jeremy, I am getting a little echo there. So the way blockchain solves a small section of fraud right now. And so eventually it is aspirational that we hope that blockchain can provide a permanent solution to wire fraud. But as of today, that's absolutely not the case. Right now, there's a section, if you can imagine a pie chart of wire fraud, a certain subsection of it, and I don't know the exact numbers, I confess, but I'm going to call it 10% happens at the title company. It may be even less than that now. And then a section inside that is when internal employees or a nefarious entity manipulates and or photoshops wire instructions and changes important information. And so one tangible use that we do is that we take that wire instruction, back that information up, hash the location, and then provide a green indicator to users so that if that information is ever changed and there's any issue with that specific image exactly as it exists, a notification goes off and that everybody is notified. And so, we do 40 checks. Some companies do more, some do less. One of them is blockchain, and it makes that specific use case better, which is limited in nature. And so we hope when we look at some of the projects out in the market, we believe that there's a way that the Alta registry could be used to permanently eliminate wire fraud, but that would be aspirational, and I by no means want to claim that that's the case today. It is a noteworthy goal worth working on, and one that we are, and something that we hope may eventually be the case, but the current state today is that no, blockchain will not 100% of the time stop wire fraud.
All right. Tony, can you share the link to download the scorecard you have up there? I think you said it's on your company website, and the link is on the PDF of the presentation.
Yep. And Yep, super. You can get any of our other materials out there as well. There's some information. You don't need to fill it out to get any of the materials. And it is safechain.io/title tech council.
All right, we are getting a lot of questions flowing in now. Some more specific for title, Tony, if you don't mind touching on some of this, and how blockchain would actually apply to the industry. You referenced, how blockchain could be used, to help, prevent wire fraud. Any other places where you could see blockchain used?
Absolutely, yes. We believe that software is going to become more decentralized. When you think about an independent agent investing in a software company, I think that now that everybody has kind of seen what's happened related to Amazon and the first wave of the internet, when we talk to independent agents, there's a concern about letting control of certain processes go, and we think decentralization solves that problem. And so we could very much see a world in the future in which title agents wanted to manage software jointly through some type of democratic or semi-democratic system. We see blockchain as a back-end technology, and so it's almost sometimes in some cases difficult to demo and explain, here's where the blockchain goes, because normally you don't interact with databases. And so very much we see an opportunity for groups of people inside title to democratically run software. That's one application. We believe that eventually the identification layer will be filled in using blockchain. So ultimately, though it's not available today, we do believe that the wire fraud problem will be solved by blockchain. And then, of course, there's a various other amount of audit and dispersal opportunities related to blockchain. Blockchain could potentially solve the race to the courthouse, though obviously that depends on a various amount of kind of legal questions and that exist state by state. And so in states with great legislators and business-friendly laws, we could very much see an opportunity to handle payments, disbursement, and recording using blockchain, though admittedly that's also a bit out. And so, yeah, so we think that, in fact, personally, so that, I've made a personal career bet that of all of the places that blockchain should go, that the title industry is the #1 place. And so absolutely, I think blockchain is going to be a massive value add to members of the supply chain inside title. And I think that I wish that title and blockchain did not get off to the rocky start that it did. I think that there's a certain brand of entrepreneur that doesn't bring calmness and pragmatism to the market. And I think that people kind of coming out really, really aggressively related to what blockchain is and is not going to do, often before understanding the technology, has kind of set the industry back a little bit. Certainly nothing that can't be overcome, but yeah. So we believe that there's tons of applications. We believe people are still figuring them out. We're still working with some of the largest agents to figure them out, and it's an early and immature market. And so I think that yes, eventually we will see a ton of benefits. We would just call ourselves a little bit more bearish than some of our peers, saying that, we won't have county recorders and we won't have this or we won't have that.
Okay, thanks, Tony. And have had some questions coming about, at the county level, and maybe you could provide a little bit more color on how blockchain was used in the foreclosure transactions you guys handled. But first, I want to hit on a lot of people on today's call are title companies, title agents, and a great question on just a practical standpoint. The question is, what can an agent actually implement in terms of blockchain? The question goes on to say, recorders can implement the technology for land records, but how can an agent move the needle?
Yeah, so right now the market is early enough that those agents are going to have to dive into projects. They're going to have to lean in and find them. There's not that many projects, if you remember the slide of kind of people looking for them. Now, what I will say is that Alta has a blockchain working group. I would certainly encourage people to get on. There's a Slack that people discuss relevant information. And so I would certainly, even though I don't believe that there are products that you could purchase today and implement and that's going to change something, I would encourage you to be part of the industry standard kind of discussion and working groups. And then I would encourage you to consistently look and demo projects. And then again, I think that over the next year or two, we're going to see a vast maturity in the market and some of those opportunities kind of materialize. But to date, it's not like you can go off the shelf and pull the software out and, you have blockchain. And so that's an absolutely great question, and one that I wish I had a better answer for you today.
Totally understandable, Tony. So if you don't mind sharing a little bit about the transactions in Franklin County, and the question specifically is, how did those transfers utilize blockchain, and were the transfers then filed with the county?
Yeah, great question. And so when we looked at the landscape, we said, okay, what's the smallest piece of a transaction that we can do to test what we're trying to do, right? What's the least complicated? And so when you talk to title companies about blockchain, one of the obstacles that you get is, well, what about this? What about this very, very specific case? And so for us, we needed to get started. And in Columbus, Ohio, we have a very technology progressive auditor by the name of Clarence Mingo, who also wanted to get started. And so what we did with them is we went in and we did a process map of some of the various processes of how they transfer title. And then we looked across those maps and said, what's the smallest distance? And it was the auditor sale, in which case the auditor is authorized by the county to unencumber a deed, transfer that deed via auction. And then, of course, what we did was had a printer that automatically printed the deed. In Ohio, you still need a piece of paper, and so that piece of paper still needs to walk down 2 floors down. And so when you think about the Franklin County project, you can think about it as foundational in nature. I think that there were a couple of people who went to the auction that were saying, where's the blockchain piece? The significance of the first 36 properties was that we went to the prosecutor in Columbus, Ohio, and said, tell me this is a legal equivalent of a deed. Sign off saying this is a deed based on the law and everything that you know. And then we transferred those properties with the legal equivalent of a deed. Then we printed them, and then we recorded them. And so if you think about what we kind of have to do next is create a portal for all of the other stakeholders. An auditor deed is a really, really small amount of the total deeds that are transferred every day. And so, one of the things that we're working on in Washington County is a mineral rights deed. And so, there are various other types of deeds that we will need to expand to. In this case, all we were looking to do was confirm that we could create a legal instrument and transfer that instrument and have it recorded. But we're very excited with a couple of the next projects coming down and expect to expand significantly in size and scope. Of course, we met with Clarence the first time. He basically said, show me that this is real, that this can actually be done. But also make sure that we do it in a place that if it didn't work, we have a backup plan. And so we had to work with them to find a project that if the technology were to fail, we were going to be able to transfer properties in kind of the normal traditional fashion. And so that's how we landed on this relatively small subset that we hope to grow and develop on over time.
All right, just a reminder, we are recording today's webinar, and it will be made available to everyone who registered. Sorry for getting a little bit of feedback there. Tony, could you address maybe how you see blockchain affecting the examination of title or the searching of title records?
Absolutely. The title search will be the most impacted part of the supply chain from blockchain. Essentially, what we have is a series of disparate information spread across the country. We don't believe that information will stay disparate, forever. And so when you think about the title search, you kind of look and that you understand that a large section of the loss ratio related to title insurance is caused by human error, and that's very much something that you could see blockchain solving. And so, when we look at the title search, we think the title searches are going to eventually be cheaper. We think that they're going to be faster, and we think that they're going to be more accurate over the next 5 to 10 years, even though, like SafeChain itself is not, currently building that section.
All right, interesting. Question about if information is unknowingly stored in the blockchain that is inaccurate, what happens then?
Yeah, so we believe that we live in a world of kind of special permissions. This is some of the critiques that we have about what we call the mainnet projects. specifically Bitcoin related, and Ethereum mainnet, which means using the Ethereum token. One difficult thing is that if everybody on this call decided to run full node, which is how you participate in the blockchain mining network, we would all have an equal vote, provided we had an equal amount of an equal node. In our society, though, people have special permissions. A judge has a special permission, a recorder has a special permission, and an auditor has a special permission. And it's our opinion that if you disenfranchise local governments from their special permission that they are given, your system is not going to be adopted. And so, in some cases, like we have to redact names. We have to redact names for social service workers, for veterans, for sometimes there's fraud and you need to change a title based on a judge's order. And so those systems, part of the challenge of building a system that's going to work is building a system that exists inside the legal framework of how properties are conveyed. And so it's a great question and one that we don't frequently talk about, but we're very, very critical of the mainnet projects. I don't know that Bitcoin is ever going to impact real estate in the way that people are saying that it's going to. And it's specifically not the title section of real estate. It may, the token real estate projects that are on Bitcoin may make sense. That's a separate conversation and one that we don't have time to go into today. But we're very critical of anyone who says that they're going to create a system that's going to change government in 3,000 counties. And we think that skepticism is merited. And happy to go into more detail for whoever asked that question, should they want to reach out outside of this webinar.
All right, awesome. A question about nodes. Maybe give a little bit more color on what nodes are. So there is a way that people can participate in the blockchain. It's the mining function or the participation function that has a couple of various forms, of which, again, to go into detail, I would absolutely have our CTO do. What you can understand is that for blockchain, you can put a little bit of computing power and a little bit of electricity in exchange, which raises complexity because you have many, many systems working on what was one specific system, in exchange for not having that central authority. And so when you think about participation, a node in Bitcoin's case is their participation in the blockchain, in the mining activity of the blockchain. And so there are a couple competing theories onto how that is going to play out. I certainly won't make an opinion here today on which one, but essentially you can think about that lingo as your participation, both cost and benefit in the blockchain. And so you might be trading a little bit, when you say node, you might be giving a little bit of computing power, giving a little bit of electricity in exchange for influence in the form of a vote or some other way on a given system. And so when we talk about systems being decentralized, again, you could think about 100 independent agents, each running their own system, which would decrease the need for like a central authority. And again, the example coming to mind would be like a safe escrow, right? And so you could any feature that you have on the front end, you could essentially decentralize and groups could run democratically on their own. And the mining or participation is one of the functions needed to do that. All right. Just as a reminder, Tony did mention it earlier, Alta does have a working group that is addressing blockchain, distributed ledger technology, and smart contracts. So if you're interested in joining that group, email Justin Ailes at justin@alta.org. And Tony, you're going to be at Alta One in LA. So this is a great conversation. So if you're going to be there as well, maybe you can catch Tony in the marketplace or during any of the networking events.
I want to say that some of the information from this presentation was actually through conversations with some of the people in the Alta blockchain Slack. It's incredibly helpful. I strongly recommend anyone do it. Also, should anybody want to talk to me at LA or otherwise, this is absolutely my 100% favorite thing to talk about. And so I'm happy to talk to anyone who's interested.
All right, we got a few more minutes, so a lot of good questions actually coming in. If we don't get to your question, Tony's email is there on the slide there, so you can reach out to him as well. Here's an interesting question, Tony. basically asking, is there a need for blockchain if algorithmic underwriting grows in prominence?
That's a great question, and certainly would depend on the solution, the winning solution. My understanding with algorithmic underwriting actually came from a conversation that Pat Stone gave at, I believe, PRIA, and he basically said, there's some places that algorithmic underwriting works, there's some places that it doesn't. Knowing how much more he understands about title insurance than me, I can only believe him. And so I have to say that I don't know. It would depend on the algorithmic underwriting solution that won, and then them getting over the obstacles that Pat had discussed, not me personally, basically saying that, you kind of have to look at claims rates, and you really shouldn't automate something in areas that are already kind of hairy related to county records. And so not my information personally, but something that made a lot of sense to me when I heard it at PRIA.
All right, now let's pitch one more to you, then we'll wrap it up for today, and maybe a little bit of a futuristic look on where we're going. The question is, it looks like kind of on the leading edge of blockchain for title purposes. Where do you see full implementation of this technology, within the next 5 or 10 years?
I think that independent agents are going to come out as the most likely user and adopter of blockchain. I think that in title, by the way, that does not include government. I think that you're going to see them move to decentralize some of the systems so that they can maintain more autonomy over their businesses. I think that the title search process is going to go down dramatically in cost, be more accurate, and be faster. I also think that you're going to see a couple of companies. When people ask me all the time, is this a winner-take-all market? And I have to tell you, given the amount and complexity of solutions, that there are 12 things that we think blockchain would work on that we just frankly don't have time or staff to build. And so I think that you're going to see a lot more companies, and I think you're going to see the traditional companies in the market start to understand the value and utilize the value of blockchain to go after new markets. And so there are a lot of really, really competent software players in title that are starting to kind of pay attention, form up projects, and test. And so I see the current incumbent software players playing a large role as well.
And actually, Tony, if you don't mind, it kind of maybe spurred another question that I thought of. You said that this could decrease the searching costs, and I guess eventually, but how does each of the various governmental entities at the county level, how do you get them to all combine and put all their data at one place? Otherwise, the title agent still has to go search various places.
Sure. Well, so I can only speak for Ohio. In Ohio, we have a wonderful public-private partnership track. We have state legislators that are happy to help. We have forward-thinking elected officials throughout the state. And so I feel very fortunate that I'm located in Ohio. I have to tell you, I can't answer that question anywhere else.
Got it. And as many know, I'm in Ohio as well. So. All right. Well, Tony, thanks for spending an hour with us today. Hashing out, how to make sense of this thing called blockchain. Looking ahead, next month we will continue the focus on technology, and we'll dig into artificial intelligence, machine learning, and automation. So with that will bring us to the conclusion of today's presentation. To wrap up, I just need to thank Fidelity once again for sponsoring our Title Topics webinars. And Tony, thank you again for sharing your knowledge on this topic.
Guys, thank you so much for having me. Very much appreciate it.
All right. Take care, everyone.